Alright, hello everyone, and welcome back to Daily Update, my 1000 Days Challenge. This is day 505, so let's get things started. Alright, so first and foremost, the balance remained the same. I think I have a small little draw in the experimental trade setup, nothing too significant. I've yet to update it because the position size is a little bit much smaller than what I mentioned. So I'll definitely be updating this on the balance update itself. That's one. And secondly, in terms of a weekly review of the market structure overall shift and stuff like that, I would say US market tentatively, even though we did form a weekly bearish candlestick on both S&P 500 and Nasdaq, I still lean towards some sort of a bullish momentum overall, especially in terms of the near term itself. So definitely to me, consolidation over here is actually a good sign. We're forming somewhat like a ascending triangle formation itself. So if we do find support over here and do consolidate near here, in fact, near the January itself, we could have a very nice push towards the new year itself. That itself could be a much potential consolidation that's needed. So on the other hand, for Nasdaq itself, even though it looks a little bit more bearish, breaking below the 50-day simple moving average, but you can see over here, we break below, we went down, we still continue to go up again. So to me, the key support or support region will come over here, which is at the 15.6K region itself. So I wouldn't say it's just a line, but rather the zone itself is definitely supportive. And even if we do have further retracement itself, looking from here to here, we can still have a very healthy retracement towards the 15.1K region itself, and still be technically looking very healthy in that sense, as a healthy retracement. But if we do further retest over here, we retest it quickly enough, then yes, it'll still be healthy. But if we do maintain over there, then tentatively the momentum or the price action wise would lean towards a shift of momentum. All right, so for China market, definitely looks to be a little bit more bearish. I didn't expect this very huge drop, especially when we maintain very nicely above here for the past 1, 2, 3, 4, 5, 6, 7 days itself. But bearing in mind that with the shift or the potential rumors or the rumors that is on the capital market of China itself definitely plays a significant role. But bearing in mind that even with this sudden drop itself, we are still clearly forming a higher low. And then after that, we definitely have a pickup. So you can see that it was potentially a so-called panic sell by people, but then there is definitely buyers that is at this region itself. So people are still keen to buy in. All right, and finally for K-REIT itself, very quick touch on it. So even with the very so-called bearish sentiment overall for China market itself, you can see that the tech stock itself didn't really have such a huge fall as what people would have anticipated. So we are seemingly seeing a decreased volume, even though we are having a lower low. The bullish bearish momentum isn't exactly gaining, both in terms of volume wise and also in terms of price action wise. So that's definitely a very good sign as well. So yeah, I'm definitely leaning that these two are definitely good discount, but bearing in mind that the capital market, that even if we do go up right back to where it's supposed to be value at, I would certainly give it a more of a greater discount compared to the US equities itself, simply because of how the Chinese government is intending to regulate the capital market of particular industry. And when they do place this kind of so-called regulation itself, long-term wise, it will be good for the industry on a whole. But the capital market short-term wise is definitely going to be quite impactful negatively in that sense, at least in my personal opinion. And finally, for Bitcoin itself, so unfortunately, we did close below the 200-day simple moving average over here. So yeah, you can see over here, definitely not a good sign. But bearing in mind that that's not necessarily a negative thing, especially in terms of long-term wise or entirety, because you can see over here, we actually broke below it. After that, we tried to close above it, we failed, and then after that, we had some sort of weak consolidation before it went up. So perhaps some sort of consolidation like this could take place, but in which case we have a slow bleed, and the slow bleed could clearly us to the 40K mark, which would be perfectly fine, something that you need to take note of. So for me over here, there was a too swift a move, but similarly, we experienced something like this with a very swift move, a very big distant or substantial consolidation phase. If you look from the start of it to here, we had a very nice 64 days, which is around 2 months of consolidation. So yeah, so if we were to have similar like this, a 2 months consolidation starting from this candle drop, a 2 months consolidation will bring us to around February next year itself. So to me, over here is definitely a good consolidation period itself for two reasons itself. One is, of course, we are is definitely on all-time discount. So I mean, from all-time high, we have dropped all the way there. We have around approximately a 32% or 32.5 or 33% discount from the all-time high itself. So over here, how much did we drop from the all-time high? You can look over here. So over here from the tip of it, we actually drop all the way down to over here, which is a 54.86% discount. I think at the low, it was close to a 55.9, which is like a 60% discount or 56% discount. So if we were to have similar kind of drop, 56 kind of percent discount, yeah, we'll actually be dropping very much to the same itself. So that could without a doubt be a potential possibility, in which case it'll be somewhat like a double bottom. But in which case I do see that potentially we could still have a weak gap bounce towards the 50 to 52K mark region itself before we drop all the way back down. That could without a doubt be a possibility somewhat like this, whereby suddenly we have a very huge jump up and then after that a weak one and after that we go down below. So let's see how things goes. I would say that if there's a huge push, definitely between these to this, so basically between the 52 to 54K region itself will be a key resistance zone. If we ever do bounce back up, that is something to take note of for short-term bearish momentum. Otherwise, that's more or less about it. I've entered the short over here. I'm sticking to the stop loss at 48.4K, 48.8K region itself. If you guys have any questions, feel free to drop by your comments below, or see you guys tomorrow. Take care. Bye-bye.